Everyone. So welcome to this session. Today we are discussing AS10, which is in continuation of yesterday's topic. So we couldn't complete AS10 yesterday. So we are moving. So we are going to start from the same place where we have left yesterday. To start with, that what all we have covered. We have covered that what is the objective of AS10. We have discussed that it talks about property, plant and equipments. Now what property, plant and equipments we have seen in the definition, which is tangible assets which are held for either use in production or supply, either used for rental to others, except land and building, or either kept for admin purpose. The tangible asset kept for any of these three purposes and expected to have more than 12 months of useful life. If all three criteria are satisfied, then we will record this as property, plant and equipment. We have also seen some of the items which are safety equipments which are required to have. They will also be added. They will also be added in the value of. They will also be added in the value of asset. Some items which are not going to be treated under or not going to be kept under this AS10, which is living animals which do not meet the definition of property, plant and equipment, or plants which are other than bearer plants. So if those are there, we can move or we can we can keep it at separate asset, not as property, plant and equipment. So let's see. We were discussing about the measurement. In measurement, we have talked about that initially we always keep the asset at cost, whereas subsequently, after recognition, means after every balance sheet date, we can keep the investment or we can keep the property, plant and equipment either at cost or revaluation. So let's look at or let's carry on from where we have left it yesterday. So when we were talking about cost, we have talked about that cost includes purchase price, any non-refundable taxes, less any discount. This is the first item. Right? This is the first item. Second item is directly attributable expenses, or which we can call required expenses. Those expenses which are there just because you are having that asset. If you don't have that asset, those expenses will not be there. So these expenses are required just for the asset. For example, just say that handling cost or freight. If I am not going to get any asset, means if I am not going to order this asset, I will not get or I will not be incurring any freight or handling charges. Since this expense is coming just because the asset is coming, that is the reason we call it directly attributable expenses, and it has to be added in the value of asset. Insurance, right, for transport. anything which is required, right? Anything which is required. We have seen professional fees like legal fees, architect, right? Or any other fees like brokerage also will become part of this. We have also seen that test run. So when we have to test whether whether my asset is working in the same way as we have asked our vendor or we are desired to work it in. So for that we do our testing, right? So first test run has to be done. For example, I have taken or I have purchased a machine. That machine will make plastic bottles, plastic water bottles, which I will sell in the market, right? Which I sell in the market. So plastic water bottles, I am planning to make. So these plastic bottles will be made by the machine which I bought. Now, whether that machine is working fine or not, I will try to produce one batch or maybe 2-3 batches, depending on that what we are doing, right? So I have tried to produce one batch to ensure that the plastic bottles which I am planning to make, is it of the same quality and same description which we have done, and we can ensure that yes, everything is working fine. Doing test run would require labor, material, right? Labor, material, power, fuel, etc. So all these things which are required for the test run, all these costs will be added to the value of asset. We call it test run cost. Ayushi, brokerage cost will be added if I am paying brokerage to buy that asset. Shraddha, warehouse is a tangible asset, of course, because warehouse is nothing but the store where we keep our products. Right? Now, when I keep my products there, it is mainly for the admin purpose. Right? It is a part of supply chain process. When it is a part of supply chain process, it means we are using it for the business purpose and it will be treated as property, plant and equipment because tangible asset is there, purpose is there, and the life cost would always be more than 12 months. Right? So we have seen that what all cost could be directly attributable cost. Right? We have seen what all cost could be directly attributable cost. At last, we were talking about our third item, right? So first is purchase cost, second is directly attributable cost, the third item which we have is decommissioning and restoration expense. So decommissioning and restoration expense, which is required, will also be added in the value of asset. If you remember, we have taken the example of telecom company. We have taken the example of telecom company. License fees to operate the business is actually intangible asset. So we are not going to consider this as tangible asset. So license is intangible asset. The telecom company has set up tower which needs to be removed after 15 years. Telecom company has set up tower which needs to be removed after 15 years. Cost of the tower is, let's assume, 1 crore. Whereas cost to remove tower after 15 years is rupees 15 lakhs. Now, one thing, whether this amount, what to do with this amount, as per the guidance, this amount of 15 lakh will become part of the asset value. So what we are going to do, my asset, which is tower, which is of 1 crore, so this asset, tower which we have of 1 crore will also have the cost of dismantling, or I would say decommissioning. So decommissioning cost would be added in the value of asset, but we are not going to consider 15 lakh as full value. Why? Because this 15 lakh which we are giving here, the telecom was set up, let's assume, on 1st April 19. So we are talking about the values of this asset on 1st April 19. Right? We are talking about the values on 1st April 19. Whereas we are making the payment after 15 years. So after 15 years would be 31st March 2022. The payment is going to go after 15 years, whereas we are talking about today's value, which needs to be added to the value of asset. Now, if we are talking about today's value, what we need to do? This decommissioning cost would be the present value of 15 lakhs for 15 years. So this 15 lakhs for 15 years, whatever would be the present value, that will be added. Let's assume the interest rate or the discount rate is 10%. The interest rate which we are going to consider for the present value purpose is 10%. So if that is 10%, the present value of that would be 1 upon R, which is 15 lakh. 15 lakh upon 1 plus R. 1 plus R means 1 plus rate of interest. Rate of interest is 10%. So 1 plus R, which is 1 plus 10%. So 1 plus 10% will become 1 plus 0.01. Right? Sorry. 1 plus 10% means 1.1. So 1 plus 0.1 raised to power the number of years, which is 15. If we do that, we get the present value. So present value of 15 lakhs today is 3,59,088. So when we have the present value, the asset value, the total asset value would be 1 crore 3,59,088 is my asset value, right? is my asset value. Now thing is, my asset value is 10 lakh, 1 crore 39 lakh, 1 crore 3,59,088 is the value, whereas the life of this asset is 15 years. So what to do when the life is 15 years? This asset will be depreciated over the useful life of 15 years. So my depreciation would not be 1 crore upon 15 years. My depreciation would be 1 crore 3,59,088 upon 15 years. So my depreciation would include that charge in that. Is that okay with everybody? But what is the accounting entry for this? Let's understand. When we have added the value here, what would be the accounting entry? What would be the general entry for this? For this 3,59,088, what exactly would be the? And what we are doing, we are adding this to the value of asset. So let's first find out what would be the journal entry and how to place that in the balance sheet. So journal entry for that would be debit tower, which is my asset. Credit what? Debit tower, which is the present value of my 15 lakh for 15 years. But what would be the credit? Have we paid the money? Answer is no. So when we have not paid the money, we cannot credit my cash. For that purpose, right? For that purpose, it will be treated as provision. It will be treated as provision, which is decommissioning liability in the balance sheet with the same value, right? In the balance sheet with the same value. If I show that in the balance sheet now, here I am talking about when the entry was done. So if I talk about balance sheet, asset, which is tower, plus decommissioning cost. Because decommissioning cost becomes a part of asset, that is the reason we are depreciating it together. If they have two different useful life, then definitely we could have thought about it. But right now we are not going to do anything. So what is happening here? I have added decommissioning here. So my total asset value would be this, which I don't need to show separately. I can show it as single item, right? So I'll show the gross item of the tower. But this amount has not yet been paid. So this amount is not yet been paid in liability side. Under non-current liability, we will create provision decommissioning. So this decommissioning would be coming here. Right? This decommissioning would be coming here. So present value, Kailash, if I talk about present value formula is 1 upon 1 plus R, which is rate of interest. If rate of interest is 8%, take 0.08. right? Means 8 upon 100. So whatever the rate of interest would be, that would reflect here, raised to power n. N means number of years. So that is the discounting factor which we use for the present value calculation. So this is how we deal with the expected decommissioning which is happening. Right? Now my question, what will happen next year? This is on the date of adding the asset. But what happens next year? Asset will get depreciated. Asset will get depreciated, which we have seen. So I am just showing you here, otherwise you have to do that separately. Just for the purpose so that we can understand that what is happening here. So my asset will get depreciated and my closing asset value would be this much. And over 15 years it will be depreciated with the same value. Now let's talk about the provision. Provision on 1st April 19, which we have recorded as 3,59,088. But can you confirm one thing? Do I have to pay the same amount after 15 years? Am I going to pay the same amount for decommissioning? Right? Are we required to pay only 3,59,088? No. We are required to pay 15 lakh. It means there is a difference in 3,59,000 and 15 lakh. There is a difference. What that difference is? If I have recorded it at present value, but I have to pay the full value after 15 years, there is a difference. Difference is 15 lakh minus this amount. Now I am going to pay 11,40,000 extra. What this 11,40,000 is, and where this 11,40,000 will come from? This 11,40,000 is actually, because I have taken the present value, it means I have ignored the interest component. So this will be the interest. But this interest we are not going to charge in 1 year. We are going to spread it over 15 years. How this will be spread over 15 years? Right? We have to pay 15 lakh. So I have to take this value, which is 3,59,000, to 15 lakh means to 15 lakh up to the end of 15th year. Now for that purpose, I create a note where I show provision note. I have number of years. So I have to do this calculation over 15 years. Today, the opening value of this is 3,59,088. Now to take it to the 15 lakh, which is the closing value, what should I do to take it to the 15 lakh? I need 15 lakh here at the 15th year. So what should I do? How should I take this to 15 lakh rupees? This is only 3,59,000. Anybody, please? Anybody who can tell me that how to make this 15 lakh from 3,59,088. How we are going to do that? The only way to do that is when we have discounted it, we came reverse. From here, 15 lakh, we came to 3,59,000. But when we have to go from here to here, from year 1 to 15 years, then what I have to do? We call it unwinding of discount. Unwinding of discount. And how unwinding of discount happens? Now, whatever discount rate you have chosen, right? Whatever discount rate you have chosen, what was the discount rate? 10%. So that 10% will now be added to the value here into 10%. If we add 10%, so it means it becomes 35,909, which is the interest cost. Now this interest cost, which we have calculated, will be added to my closing value. So my closing value would be opening plus interest. Now this closing value will become opening for the next year. Right, so you can see it is same. This closing will become opening for the next year. And I'll again charge 10% interest on the new opening value. The value of opening liability or the provision today which we have. Then again I get closing value. Again opening, interest, closing. And by doing that up to 15 years, I get the value of 15 lakh. Is this okay with everyone? We are compounding it here. Exactly. Right? Hope this is okay with everybody. Now what will go to my profit and loss account every year? My profit and loss account every year, right? I'll just show you that also. My profit and loss account every year will have two expenses. One is depreciation, which is coming from here. So one is depreciation. Which will be same every year. Another one is interest. So since we are in first year, so my interest would be of first year. If we are in second year, interest would be of second year. Same 15th year. Hope this is fine with everybody. What happened when we have a decommissioning liability? Now, if we talk about, is it very common? Is it common in nature? Yes. For example, I give you some live examples here. Let's assume you have taken land on lease for 20 years. You have constructed a factory which needs to be demolished after 15 years, after lease period. And this demolish would require some expenses. Let's say demolish would require 1 crore. If demolish require 1 crore rupees, then present value of 1 crore because you know that after 20 years you have to spend this amount, become part of the asset. Similarly, this is one example. Similarly, it is not just decommissioning, but restoration of environment would also be the example here. Let's assume one company operating near Ganga river, right? One company is operating near Ganga river, right? Now they are producing, let's say, leather. They are polluting Ganga, and as per the government regulation, if you are polluting the river, you have to clean the same after you shut your operations. Or for example, let's say you have the license for 20 years. After 20 years, you have to clean the Ganga. Now, Ganga cleaning is not possible for you, but what you can do, you can estimate how much amount you may need to spend. So that amount which you need to spend will be required to clean the Ganga after 20 years. So you will record a present value, right? You will record a present value, and that present value will be added in the value of asset. Hope this is okay with everybody. Is that okay with all? Interest credit entry goes to debit P&L, right? Debit P&L, and my liability, as you know, that closing liability is this interest will be added here. So my closing would be this. So it means debit interest in P&L, credit the provision which we have created, right? Credit the provision which we have created. So it will keep on increasing the provision, and it will go up to 15 lakh rupees at the end of period. Now again, right? So though you have understood the amount has to be added, but why it has to be added? If you remember this, if you remember the concept why it has to be added, you will never forget to add that value. Why it has to be added? Only required expenses would be added, right? So we apply the concept of AS29 Hansla, right? That gives the guidance on that how to find out the discount rate. So whereas discount rate is nothing but discount rate is your incremental borrowing rate or the market rate. So generally, the incremental borrowing rate is being considered. If you want to buy an asset, how much interest would be charged to you by the bank? That interest rate would be your discount rate, practically. Otherwise, question would have that rate for you. Question would always have that rate for you. Shraddha, I completely agree, right? So they have mentioned decommissioning recognized as per AS29. So AS29 says this 15 lakh. This 15 lakh which we are talking about is nothing but my estimation, right? So it will always be my estimated amount. So demolish would require 1 crore. But do we know that how much amount is required? Means how much amount I am going to spend after 20 years? No. So this is estimated. This 1 crore is actually the estimated value. Right? It will always be estimated. Nobody can tell that how much amount would be required at the end of 20th year. Nobody can tell that. But now coming back to this, why? Right? Why we are adding this? Because we have seen that only required expense so this material is coming from the study material which you have ICAI study material. All is there, right? So don't worry, but this is getting uploaded. Right. Okay. But why? Akshay, I'll come back to this just after solving this question, answering this question. Only required expense we have seen would be added. But why we are adding something which is not required today? It is required after 15 years or 20 years or whatever the period is. When it is required after 15, 20 years, why we are adding that value today? Now the question or answer is, if that telecom company say, right, if that telecom company say 15 years, we are not responsible, you have to remove this yourself. If telecom company says we are not responsible, you have to remove that tower yourself. Right? And what if this company which is operating near Ganga, right, which is operating near Ganga, denies to, right, we are operating this company, if this company operating near Ganga denies to restore or to clean the Ganga. The question comes up, if we do this way, one company says, I am not going to dismantle or decommission it. Another company says, that we are not going to clean the Ganga after 20 years. While here I am talking about after a certain period of time. Generally, when I am talking about shut my operations means that government has given me a license to run the business for, let's say, 15-20 years. So after 15-20 years, when license expire, I have to clean that Ganga river. Right? Now, if I say no, or if I say no here, if I say no to the customer, to the owner of the property that I will not remove that tower, will owner agree for this? Will owner agree and allow me to set up? Will they allow me to set up the tower? And if Ganga or if company says no, that we will not clean Ganga, will government give license or permission? Right? So Rosalind, interest never be added. Interest only get added when we follow the concept of AS 16, when it is a qualifying asset. which takes substantial period of time in construction. Here, that is not the case, right? So interest will not be added. So Manvi, if company wind up before 15 years or the estimate changes, we will come to that, right? But do we understand the concept here? The concept is that if telecom company says no, or this company says no, they will not be allowed. When they will not be allowed, it means that the dismantling cost we are talking about becomes a required expense. If you won't accept that, you will not be allowed to construct that or build that asset. If you are not allowed to build that asset, what does it mean? You will not be able to construct it. So that is the reason this dismantling cost, even though I am incurring after 15 years, becomes a required expense and I have to consider it. Hope this is okay with everybody. So hope this is okay with everybody. Right? So this is about why it is required to be added. Now we have seen decommissioning cost get added to asset at its present value, right? At its present value. As I mentioned, decommissioning cost is nothing but, right? So the 15 lakhs we have considered for removal of telecom tower. For removal of telecom tower, the asset or the decommissioning cost which we have for removal of telecom tower, from where I got the 15 lakh, right? Who told me 15 lakh would be required? Because we are sitting here today on 1st April 19, whereas I have to pay the amount on 31st March 34 after 15 years. Who told me that 15 lakh would be required? Right? Because if you look at the amount, one, that the value which we are talking about may be based on the value today. We are not talking about the price of the labor in the next 15 years because the changes are happening. Right? Because changes are happening. Priti, we have taken debit side of. We have taken debit side of asset, not debit side of provision. It is credit side of provision, right? Because it's a liability. Right? Now, in 15 years, the 15 lakhs which we have estimated, the estimated has been done on today's date. But what happens if, let's say, next year, 31st March 20, 31st March 20, the situation changed. Situation changed considering the today's scenario. Let's say we are in pandemic right now. Has come. Because of that, labor rate, material rate, and everything changed. I estimated 15 lakhs last year. But let's assume instead of 15 lakhs, this year I feel that not 15 lakhs, at least 20 lakhs would be required. This is not 15 lakh, 20 lakhs are actually required. My estimate is changed. When my estimate is changed, what will happen to that value which we have calculated? Right? Maybe contractor, but contractor has also taken, right Joseph? Contractor would have also taken the current estimate. He doesn't know what would be the values and everything. He has given me the estimate, right? So I believe that on 31st March 2020, the value would be 20 lakhs instead of 15 lakhs. So what to do? So for that purpose, I will find out what would be the value of this on 31st March 20. I was having the opening value. So 1st April 19, the opening value was. So let me just go back and find out the values for you. Opening value was this. Then we have added interest at the rate of 10%. So my closing value was this. My closing value is this, which is opening plus interest. But now let's assume this closing value is based on 15 lakhs estimate. But what is the new estimate? New estimate is 20 lakhs. So I'll go back again. I see that if I have to pay 20 lakhs after 15 years, what would be the present value on 31st March 20? So the present value of 20 lakhs, right? Present value of 20 lakhs for 14 years now, because 1 year has already gone. So out of 15 years, 1 year has already passed, so we just have 14 years left. So present value of 20 lakhs would be 20 lakhs divided by 1.1 raised to power 14. So I get present value changed. This present value is coming as, so on 31st March 2020, new value of provision would be this. What is the change? What is the change? Change is the new value minus the old value. So 1,31,666 is actually the change in the value of provision. In value of provision, what to do with this? What to do with this? What I did when I have taken the present value earlier, I added that present value in the value of asset. So this change which we have got here, 1,31,666, again, right, which is the present value of 20 lakhs for 14 years. I got 5,26,000 minus whatever is the closing value we have. The change between these two values will be added to the value of asset. So my closing value of asset would be, I am just showing you that what will happen. So my closing value of asset would be new closing value on 31st March 20. So new closing value would be old closing value plus the change. Is this okay? And why this change has come? Because the value which we have considered 15 lakh was an estimate and it can change. What if the value instead of 20 lakhs, the new estimate is 10 lakhs. The value is lower. So if value is lower, what will happen? It will come down to 2,63,000, half. And my change is negative 1,31,666. If it is negative, the asset value will be reduced. So whatever it would be, if it is increasing or decreasing, whatever is happening, that increase or decrease will impact my asset value. Hope this is fine with everybody. So whether it is increased or decreased, it will always hit my asset value. The present value is this. You can look at in the bar here. 1 lakh upon 1.1 raised to power 14. Hope this is fine with everyone. So this is about how we are recording prospectively only, Vaishnavi. We are not recording retrospectively. So whatever change has happened, that change has impacted my current value of the asset. I have not added to the beginning value. I have added to the current value. Means the moment the change happens. Another thing, what could be the other change? What can change these values? So these can change, or these value, what can change these values? One, we have seen change in estimate. It's gone from 15 lakhs to 20 lakhs or 10 lakhs. That is change in estimate. Or there could be change in interest rate. If interest rate changes, then again the value may also get hampered. So that whatever the change would be, whether interest rate changes or estimate changes, both the changes will have an impact on provision as well as on asset value. Hope this is okay with everyone. Useful life also. Yes, Saurabh. So somebody has mentioned that what happens if we are closing it today. It again means that the number of years is getting changed. So period get changed. Any change which comes up, that will be added to the asset value. So why we have added this to the profit and loss account, this interest? Because this interest is actually the unwinding of discount, right? So we call it unwinding So because of time value of money, whatever impact is coming in, that impact should not go to balance sheet. Time value of money impact we are considering in the profit and loss account. That is the reason interest portion is going to the profit and loss account. Hope this is okay with all. So we are done with different scenarios, different areas, like how decommissioning cost can be there, how it should be calculated, what should be done after year and after every year, right? How it is to be depreciated and how the interest component would be allocated if how interest should be allocated if the amount is there. One question Harsh has asked, so let me just answer that because that is related for everyone. Now, as my values change, as my new value of liability or the provision is this, my interest for next year would be based on whatever would be my new value, right? So whatever would be my new value, on that basis, I am going to charge the interest. So closing value would be whatever is the new value, keep the interest on that, forget about the old value, right? So that is about measurement of property, plant and means the cost which goes under property, plant and equipment. Purchase price, directly attributable cost is plus decommissioning and restoration cost. All these costs, right? I hope everybody is clear and everybody will be able to address this issue if it comes in the exam. In exam, you may be given decommissioning cost along with interest. You have to bring to the present value. Or if they have mentioned the present value of decommissioning cost is this, so no need to calculate the present value again. So that is the present value and that present value will be added to the asset. So at the end of 15 years, the value of my provision as per the new estimate, which is 10 lakhs. So the value of provision at the end of 15 years should be 10 lakh, whatever the new estimate is. Because as my estimate changes, I am keep changing my values, right? I hope this is fine. Okay, so we have talked about what should go. Now we are going to talk about what should not be added. What should be excluded from the property value, means the cost. We should not add certain examples or certain costs or certain expenses in the value of asset. Let's look at one by one. The first one, cost of opening a new facility or a business, such as inauguration cost. So inauguration cost can never be added in the value of asset. For example, let's say one company has built up the hotel and to inaugurate they have asked Shah Rukh Khan to come and Shah Rukh Khan has charged 5 crore rupees. Now those 5 crore rupees which they have paid to Shah Rukh Khan will never be added in the value of asset. Now why it will not be added in the value of asset? Because the value they have paid to Shah Rukh Khan will not contribute anything in the hotel value, right? It is just to make the hotel popular. So that is the reason we have asked Shah Rukh Khan to come. Is that okay? Cost of introducing new product or services, like cost of advertisement or promotional expenses. Cost of promotions, cost of advertisement can never be added in the value of asset. Why? So for example, let's say again I have built a hotel. Now I am doing promotion, I am doing advertisement on Facebook, YouTube, TV, everywhere. If I am doing advertisement expense, it will never be added in the value of asset. Why? Because whatever expense you are doing on the advertisement, you never know whether you will be able to recover that amount or not. Right? Whether people will like your advertisement or not. Right? So that is the reason all promotion related expenses will never be. Cost of conducting business in new location or with new class of customer means that if I am going to enter into new market, let's say I am going to start up my business in Punjab also. Now for Punjab, I may have to create a new product. I may have to give training to my staff so that they get trained on the new product, new customer, new place. Now that training which we are giving to staff, any expense which you do on staff will never be added in the value of asset. Again on the same concept, because staff is not my asset. We never know whether staff is going to stay with me for longer term or not. So that is the reason we are not going to add that. Of course, it will be part of the disclosure. Whenever anything changes, right? Whenever anything changes, it becomes part of disclosures. Hope this is fine with all, right? What to be excluded, we have also discussed that. Now, if I talk about the last one, any administration and general overheads. Cost of my office staff, cost of my office, cost of my accountants, which are or who are not working in the project directly. Their cost will never be added in the value of asset because their cost is not contributing in the development of that particular asset. So these costs which we have talked about will be excluded. Whenever these costs comes up, these will not be added in the value of asset. If these are not added in the value of asset, what we are going to do? We will charge them to profit and loss account. We will charge them to profit and loss account. That's what we do when we have to find out the cost of the asset. So cost, what is directly attributable cost? We have already seen. Okay. So there are certain examples. Again, they have mentioned that these are not. Right. So please make a note that these are not to be included. Similar to what to be excluded, these are not to be included. So what about depreciation? Depreciation, we have all discussed that if the asset value changes, depreciation will also change, right? Because if interest is changed, asset value change, depreciation will also change. Depreciation would be based on the value, the new value which you have in the books, right? Saurabh, yes, whenever you have lease and you have building, then of course you have to show the lease land and the building separately, because the lease component is different and the building is the leasehold improvement, basically whatever you have added to the asset. That is yours. Okay. Measurement of PP again, which there are certain costs which also need not to be added in the value of asset. First one, cost incurred while an item is capable of operating in a manner intended by the management, it will be brought into use, or it is operated at less than full capacity. It means any just give me 1 second. Sorry guys. So cost which need not to be added. So cost incurred while an item is capable of operating in a manner intended by management has yet to be brought into use or is operated at less than full capacity. For example, my machinery is ready to be used. I have done test run also. I have done test run as well. Now if test run has been done, machinery is ready to be used. Now any expense which I do, right? Any expense which I do, for example, let's say move this machinery from let's say one factory to another. When machinery is already capable of getting used, is already ready to be used, then any amount which we have spent on that machinery after that will not be considered. Right? So one example is moving this machinery from one factory to another. When I am moving this machinery from one factory to another, so Dipendram, when we have some staff which is getting dedicated, which is going to work in the commissioning of the plant, their salary will definitely get added. If you remember, we have discussed first part was what is the directly attributable cost, AS15, right? Employee benefit. Those employees who are dedicatedly working on that particular, right? So any expense once asset is ready for use, for example, moving machinery from one factory to another, this movement from one factory to another happening once asset is ready for use. If asset had not been ready for use, then it could have been added. This cost which we are talking about here will be charged to profit and loss account. Will be charged to profit and loss account once the asset is ready for use. Initial operating losses. Let's assume my store will open on 1st July. Now I have employed staff on 1st April. I have employed staff on 1st April. So what would be happening if my operations are not started till 1st July? So it means for first 3 months, April, May, June, I have to pay salary to these staff. Why? Because I want to train them. I have hired them because I want to train them so that once I open my store, they are trained staff. For that purpose, so the cost or the operating expenses or losses of operating expenses or losses before the use of the asset will also not be added in the value of asset. This will go to profit and loss account. Why we are doing that? Because these are related to my operations. These are not adding in the value of asset, or these are not contributing in the development of the asset. And the last one, cost of relocation, right, which is similar to what we have seen. If I am relocating my business or the operations from one place to another, so I can tell you one example. I am not really sure if you have read that in the news earlier or not. If you remember, Tata Nano car, which they started manufacturing in Gujarat. So this Nano car earlier was planned to be started in West Bengal. It's supposed to be started, means Tata has already established a plant or built a plant in West Bengal. But because of some government issues, some political issues, they had to move the plant from West Bengal to Gujarat. So when they are moving the plant from one place to another, that is the relocation. The plant was already in place, which could be ready to use. But I have decided to move that plant for any reason from one place to another. When I have decided to do that, that relocation cost will not become part of your asset, because asset is already ready for use. There is no further development which is required right now. So this relocation is not adding any further development of the asset. That is why we call it, or we take it to the profit and loss account instead of taking to the So we have already seen this one. If you remember, we have already seen these parts. Costs which are not to be included in the value of asset. Cost of opening new facility, calling Shah Rukh Khan. Cost of introducing new product like promotions, advertisement. Cost of conducting business in new location like staff training. I have to take the new premises and everything. And admin and general overheads, which are not going to get added. Anybody has any question, right? We are discussing one example. Anybody has any question, please raise it right now. Pallavi, when estimation changes, my depreciation will also change. Okay. We say that cost of employee training. The cost of employee training will never be added in the value of asset. Why? Because let's assume you have trained the people, but you never know whether those people are going to stay with the company or not. Right? Whether those people are going to stay with the company or not. That is the reason the employee training cost will never be added in the value of asset. Or any employee cost which we are incurring, right? Other than the salary which we are paying for the workers or the people who are dedicatedly working on that. Right, Ashish? Exactly. So that was the case when Tata had to move from West Bengal to Gujarat, right? Okay. So measurement of PPE, let's look at the example. It says income may be earned through using the business site. I give you another example. Let's say you have done test run. Test run means you are trying to manufacture some units. If you remember, we manufactured 2 batches of bottles. Cost of the test run was 1 lakh. This can be added in asset value because this becomes part of directly attributable cost, right? So, but let's assume these 2 batches of bottle which I have produced with 1 lakh rupees, I can sell these as sample in the market. I can sell these samples in the market. I have incurred 1 lakh, but I can sell these samples for 20,000. Now, if I sell these samples for 20,000, this samples is being produced because I wanted to do the test run in nature. Incidental means just because I wanted to do something, I got another thing. When this would be the example, then my net test run cost is not 1 lakh. My net test run cost would be 1 lakh minus 20,000, which is 80,000, and this will be added in asset value. Generally, it gets added when we talk about the test runs only. Other than test run, generally they are not get added. Right? So this will be added in the value of. Whereas if they are not incidental in nature, means it is not related to my construction. It is not related to my I would say it is not related to my construction or the test run. Then in that case, that amount will be taken to the profit and loss account, right? For example, I am constructing a building. While constructing a building, I have my plot on which the building has to be constructed. Now, while constructing the building, the plot is empty. When plot is empty at parking, I have started giving that for the parking purpose, and I am earning some money. Is it related to my construction? Answer is no. Because even if I don't construct, I can still earn that money. So it has nothing to do with my construction. So it will not be added or deducted from my asset value. It will be taken to the profit and loss account. Right? So let's look at one illustration here. This is illustration number 4. Entity A has existing freehold property which it intends to knock down and redevelop. During the redevelopment period, the company will move in the production facility to another temporary site. The following incremental cost is generally yes, but if that is incidental, just because the test run we have done, those test run has produced some samples. If I am taking that test run cost in the asset value, That is the reason I am deducting the sample value from that testing cost, right? So that my asset value is not escalated, right? So entity A, moving plant from one location to another. Moving plant from one location to another. Setup cost is 5 lakh. Rent is 15 lakh. Removal cost is 3 lakh. Can these costs be capitalized into the cost of new building? Demolishing the old building or reconstructing the new building. When I am doing that, I have to incur certain expenses because I have to move my factory from one place to another. Can these be added in the value of asset? Can these be considered as the capitalization of expenses here? Since it falls under this cost of relocating and reorganizing the part of operation. So the last part here. So we have seen cost of relocating or reorganizing will never be added to the value of asset. So none of these costs will be added. Now let's look at illustration 5 also. Entity A, which operates a major chain of supermarket, has acquired a new store location. The new location requires significant renovation expenditure. Here we are not talking about anything from the older one. Here we are talking about the new property. Management expect that renovation will last for 3 months. During the supermarket will be closed. Management has prepared the budget for this period, including expenditure related to construction and remodeling costs. Salaries of staff who will be preparing the store before its opening and related utilities cost. What will be the treatment of such expenditure? So what all costs we are incurring? We are incurring the cost of remodeling, or I would say renovation. We are incurring the cost of salaries of staff which are already there, who will be preparing the store, not renovating the store. So those staff who are involved in preparing the store means they will stack up all the goods, they will keep all the supermarket stuff at the right place. Their cost, right, salaries to the staff which are already there. So their salary will not be included. Whereas renovation cost is actually the subsequent expenditure which will add further to the revenue. It means it is going to get the future economic benefit. So these future economic benefit will be added. Means this renovation cost will be added. Whereas the staff salary, if the staff salary means if staff is involved in the renovation, then it would be added. If the staff is not involved in the renovation but is going to be involved just to prepare the store ready for its opening, that is not going to be considered as capital expenditure. That will be charged off to P&L. Hope this is okay with everybody. Is that okay with everyone up to here? Anyone has any question which they want to ask? Anybody has any question which they want to ask? Please ask. So Arun Kumar Chatterjee, test run cost can of employees cost. Test run cost will include employee cost, right? Could be my labor, material, everything, which will go in the inventory value, right? So instead of taking to the cost of sale or to the inventory value, I am taking it to property value. Good, Sakshi. I think you have answered this. Okay. Now moving on to the decommissioning, restoration and similar liabilities, we have already discussed. What we do in decommissioning? Initial estimate at the present value get added in the value of asset. Right? We have already discussed that. Right? We have already discussed that. And what to do when there is a change. How we include that change, that we also have discussed. Moving further, cost of self-constructed asset. Till now, we have talked about the asset which we are buying from vendor. Now, what would be the cost if we construct the asset ourselves? If we construct the asset ourselves, what would be the cost? Then, if I have to construct the asset, cost will involve labor, material, any overheads which are required, right? Any directly attributable overheads which are required, all those will be added in the value of asset. Now for that purpose, let's look at this. It says, if an enterprise makes similar asset for sale in the normal course of business, the cost of assets is exactly the same which you are making for the others, right? For example, if DLF is making apartments for everybody, now if DLF has to make apartments for their own staff, their own company, which will be property, plant and equipment for DLF. Now those apartments, what would be the cost? It would cost in the same way as it costs for the inventory. As they calculate the inventory cost, their cost will be added. It will be same as the inventory cost. Shraddha, you are mentioning. Shraddha, as you are mentioning that first, Chitra, you have mentioned that treatment of loss when supermarket were closed. As we know that operating losses before the asset is getting used will never be added in the value of asset. So the losses which we incur, the salaries, electricity bill, everything which we are incurring, those losses or expenses will never be added in the value of asset. They will be taken to the profit and loss. So Shraddha, you are mentioning staff is required indirectly. So we are assuming again that the staff which is coming here is not directly involved in the in the renovation. They are just there. For example, let's say today I have a shop. Now that shop I want to renovate. I have renovated the shop. I cannot renovate myself. So I have included a contractor who will renovate that for me in 1 month's time. He has renovated it. Now once the renovation is been done, I have to keep all the stuff back to the shelves and everything to make sure that my shop looks nice and customer can buy products. Now that cost or that employees who are working on that area will never be added in the value of cost. That is again the assumption you can consider, right? They are directly, they are working on that, not working on the renovation part, right? Okay. The cost of asset would be calculated in the same way as the cost of inventory we calculate, which is labor, material, overheads, everything. Cost of abnormal wastage, abnormal labor will not become part of cost. Those abnormal wastage, wastage in the material, labor, and everything will be taken to the profit and loss account straight away. So Malvika, cost of relocation, which you remember, cost of relocation means if you are already doing business here today and you are planning to move from this place to another place. Let's assume you decided that I'm not really sure. What happens generally is that in Delhi, right? In Delhi, around 15 years back, all the industries which were operating within Delhi are asked that you are creating pollution, so you should move from Delhi to outside Delhi, right? Maybe to Gurgaon, maybe to other location, but don't keep your manufacturing units in Delhi so that we can control the pollution. Now what they will do? They will take all the machineries, all the equipments to other location. Those other location means those movement which is required from one place to another is relocation and will never be added in the value of asset. Right. Okay. Coming back to this, any cost of abnormal wastage will never be added. Borrowing costs, which we will discuss when we'll discuss AS16. Borrowing cost can be added in the value of asset, self-constructed asset. Self-constructed means I am constructing myself, right? So borrowing cost will be added in the value of asset, right? If it meets certain requirement, right? If it meets certain requirement that we are not discussing here, that we will be discussing in AS16 only. Right? And bearer plant, if we talk about bearer plant which we have grown, like mango tree, apple tree, all these bearer plants which we have grown will be treated as self-constructed items. When they are in these self-constructed items, so whatever cost we have incurred to bring it to a certain level where they can start producing the agriculture produce, mangoes, apples and everything, right? That would become part of the cost of the asset. That will be the cost of the bearer plant, right? I hope everybody is clear up to this particular point. I hope everyone is clear up to this particular point. Anybody has any doubt, you can please ask. Manasi, I understand your point here, but I just want to make it more interactive. so that anybody is asking relevant question, which is useful for everyone, right? Could be addressed there, so that everybody can understand the point there, right? So the taking queries is actually just relevant for that. Now, measurement of cost. Again, cost was the purchase price, right? Purchase price, directly attributable cost. And purchase price, directly attributable cost, and decommissioning cost. So one more question has come related to I would say in the borrowing cost. If we have taken a loan to purchase the asset, can the interest be added? Answer is yes, but for that certain conditions to be met. Let me just explain you those conditions. So borrowing cost, I mentioned, the borrowing cost can be added in the value of, means interest cost on loan can be added to asset value. It can only be added. It means one criteria is that asset should take at least 12 months in its construction. If asset is going to take 12 months in its construction. For example, I am buying a car, taken loan of 5 lakhs. Can I add the interest in the car value? Can we add interest in the car value? Answer is no. Why? Because car is already ready for use, right? And it is not going to take more than 12 months. Which asset can take more than 12 months? Maybe let's say factory building. Dam, stadium, hotel building, which are going to take more than 12 months, and during the construction period I can still add the interest cost if that period is more than 12 months only. If it is less than 12 months, I am not going to add the borrowing cost into it. Right? Okay, now coming back to this, cost is nothing but purchase price, directly attributable cost, and decommissioning cost. Now what is happening with decommissioning cost? Decommissioning means we pay after certain period. We pay after certain period. Let's assume the period is 15 years, 20 years, and so anything. We consider present value. We consider present value. The same concept has to be applied to the purchase price also. Let's assume XYZ is buying an asset from ABC. XYZ is buying an asset from ABC cost is 11 lakh. Cost is 11 lakh to be paid after 1 year of delivery. I have discussed with my vendor ABC. I asked him that the cost which is there of the asset, which is 11 lakh, I will pay you that amount after 1 year of delivery. I can't pay that right now. When the amount is going to be paid after 1 year of delivery, the value I am not paying today, I am paying after 1 year. Will this 11 lakh to be paid after 1 year having the same value? Having the same value. Is this amount of 11 lakh, right? So is this 11 lakh which is to be paid after 1 year having the same value today? Answer is no. There is a concept of time value of money comes in. So it says whenever there is a difference between the delivery and the payment, and the difference is, let's assume, more than 1 year. Normal extended period. Normal then generic borrowing period, right? Your credit period, right? So extended borrowing we have got for 1 year. Now when we have got extended borrowing for 1 year, what will happen? Asset value will not be 11 lakh. Asset value would be present value of 11 lakhs. How we are going to get the present value? Let's assume the interest rate is 10%. Interest rate is 10%. So what would be the present value? Present value of again 1 upon 1 plus R raised to power n. So here 11 lakh divided by 1 plus R, which is 1.1 raised to power 1, because here we just have the gap of 1 year. So my value here is 10 lakh. So my purchase price, instead of 11 lakh, I will consider 10 lakh. I will consider 10 lakh here. And the difference between, I will pay 11 lakh next year. What does it mean? It means the difference is actually the interest cost, which is to be added, or which is to be charged to profit and loss account. It will be added as borrowing cost. Right? It will be added, or it will be added as borrowing cost only and only if it is a qualifying asset, means the asset which is going to take more than 1 year period. Right? It will be added if and only if it has more than 1 year period. Otherwise, it will be taken to the profit and loss account. I hope everybody is understanding this. Right? This happens when deferred payment beyond normal credit terms. because we are applying the time value of money concept to our decommissioning cost, that time value of money, right, which we have considered in the decommissioning cost, we will consider the same time value of money in our purchase price also. All these concepts are new concepts which you might have not seen. So that is the reason you should always consider, right? You should always remember these points, because these are new concepts. These were not there earlier. These got revised with the revision in the AS10, right? Now moving further, what happened? There may be a case instead of buying the asset by paying the cash, you purchase the asset by way of exchange, right? You purchase the asset by way of exchange. Now, when you purchase the asset by way of exchange, there could be two things which comes up. One, right? One, let's say XYZ, they need 5 cars. They need 5 cars, whereas ABC needs 15 or let's say 20 bikes. So this is Maruti. This is Maruti. This is Hero Motocorp. So Hero Motocorp manufactures bikes. Maruti manufactures cars. Hero Motocorp needs 5 cars for their employees. Maruti needs 20 bikes for their employees. So what they did, instead of buying or instead of paying in the cash, Hero Motocorp given bikes to Maruti and taken car from Maruti. So this is what we call exchange of assets. Now, whenever the exchange of asset is happening, how to deal with that? Another thing could be, I want to buy new car. I already have an old car. I already have an old car. So what I did, I exchanged my old car with new car, right? Plus given some money. Plus given some money. Now, whenever these transactions are happening, when I am exchanging my asset with another asset by giving or getting some money, then in that case, the transaction right? Transaction means asset coming in. The new asset coming in should always be recorded at fair value. Means what would be the market value of that product or that asset? That asset market value should be considered here instead of that asset market value should be considered here, right? So Bharat, do mention your query in case I have missed your query here, right? So transaction, asset coming in, new asset which we are adding should be added, right? Should be added at fair value. For example, right? For example, I have old car in my books, carrying value of the old car let's make it in the balance sheet. This is my balance sheet. I have an old car, right? Old car having the carrying value of 2 lakh in my books. I am getting or exchanging with new car. I want to buy Honda City. So what is the value of new car? Instead of getting the value of new car, what has been told, right? What has been told that I have to give my old car plus 9 lakh rupees cash. So I have to give my old car plus 9 lakh cash to get new car. Right? That is the question which we have. The new value or the fair value of Honda City in the market is 12 lakh. Fair value of Honda City in the market is 12 lakh. So what will happen? What will happen? How the transaction will be recorded? I will record the asset as debit new car debit new car 12 lakh. I am not doing 9 lakh plus 2 lakh which I have given. As I mentioned, I will use fair value of the asset. Debit new car with 12 lakh. Credit cash with 9 lakh. Credit old car with 2 lakh. It means that by giving 9 lakh and 2 lakh rupees asset, I have got asset worth 12 lakh rupees. If that has happened, there is a profit, or I would say gain on disposal of asset. That will go to profit and loss account. I hope everybody is clear with this. Right? I hope everyone is clear with this. If I am giving my old asset, but the new asset value I know, instead of recording the Honda City at 11 lakh rupees, I am recording the Honda City at 12 lakh rupees, which is the market value. And the difference between the value which has come to me or which is going out, I have taken this to the profit and loss account. So let's change the example again. I am giving my old car. I am giving my old car along with 11 lakh rupees. Instead of 9 lakh, now I have to give 11 lakh rupees. Honda City of 12 lakh is coming in. What does it mean? Again, follow the same concept. Debit new car 12 lakh. Credit cash 11 lakh. Credit old car, which is 2 lakh here. What would be the difference then? What would be the difference then? Right? How the difference would be treated? The difference here, I am getting asset of 12 lakh by giving asset worth 13 lakh from my books. So the difference here is actually the loss on disposal. And that loss will be recorded in profit and loss account. I hope everyone is clear with the concept. Right? I believe everyone is clear with the concept, and we can take care of this. Now, it says it should be always the cost of such item should always be measured at fair value. Right? Cost should always be measured at fair value. Santosh, profit of whom? Profit of mine, because I am the owner of the old car. I have given my old car, got the new car, right? So profit is mine, right? Okay, so cost of such item whenever we exchange is always kept at fair value, except in two cases. Case number 1. When transaction lacks commercial substance. When transaction lack commercial substance, what is commercial substance? Commercial substance means that they on cash flows and no impact on P&L. When transaction is losing the commercial substance, for example, I have given 3-year-old Maruti Swift and got 3-year-old Maruti Swift. So I exchange my asset. You may ask that why I am doing that, but I have exchanged my asset. I have exchanged 3-year-old Maruti Swift, which is white color, with 3-year-old Maruti Swift with red color. Now, when both of these are 3-year-old, depreciation may be same for both, right? And no exchange of money has happened. Right? No exchange of money has happened. Now, whenever this case comes, let's assume the old car, Maruti white car, in my books was, right, car old was in my books with 2 lakh rupees. Right? So Sanjay, okay, I'll just come back to this because you are asking the relevant question, right? So let's understand this. Old car value is 2 lakh, let's assume. I have exchanged with the new car. Now, when the commercial substance, because when there is no impact on the P&L, no impact on the cash flows, I say no commercial substance. I am actually getting the same asset back, similar asset back, exactly. So what we are going to do, we will not change the value at all. We will keep it at from car old to car new, that's it. Asset value would remain the same because that this exchange transaction has no commercial substance. Now, Sanjay, what you are trying to say, if the book value of the car and the agreed price by the vendor are different, that is the reason we are trying to figure out what is the value. So, agreed price, you don't know, that is the reason we are finding out what is the loss or profit. Right? So, book value and agreed price is always different. Always. That is the reason the profit or loss are coming. So, Rosalind, if purchase price is given, that purchase price is actually the fair value. Fair value nothing means the market value, which is the purchase price. So, first is transaction lacks commercial substance. We have discussed regarding that. The second is I don't know, right? For example, let's say I have exchanged 3-year-old Maruti car with 2-year-old Maruti car. But I don't know the fair value of asset given and fair value of asset received. I don't know the fair value of any of these assets. If I don't know the fair value of any of these assets, again, value will not change in the books. When no commercial substance or fair value is not clear, then I keep the asset at the same value. The name of the asset gets replaced. That's it. So Tina, what happens is that if the value is almost similar, so 290 to 3 lakhs, generally here is a profit of 10,000 for one and loss for 10,000 for one, right? So that's what happens, right? Let's look at this example. Entity A exchanges a surplus of land with a book value of 10 lakh for cash of 20 lakhs and plant and machinery value of 25 lakhs. What will be the measurement cost of the asset received? So what we have done, right? I have given 20 lakhs and I have given land and I have got 20 lakhs and plant and machinery which is having a value of 25 lakhs. So in my balance sheet, again I am making a balance sheet here. I have a land in the balance sheet at 10 lakhs. I have given this land and I have received cash of 20 lakhs. Cash received 20 lakhs and plant and machinery of 25 lakhs. So what would be the value of the transaction? What would be the value of the transaction? The transaction value, I am giving away my land for 45 lakhs. Right? I am giving my land for 45 lakh. So what will come? Cash debit, plant and machinery debit, and land asset credit. So I will get 20 lakhs here, 25 lakhs here, whereas plant and machinery, land and building The difference between that will be taken to the profit and loss account as gain on disposal, which is 35 lakhs. I hope everybody is clear with the concept here. Right? I believe everyone is clear with the concept here. Anybody who has any doubt, please ask. Right? Let's look at illustration 8 also. Entity A, exchange car X, book value of 13 lakh and a fair value of 13.25 lakhs, 13 lakh 25,000 for a cash of 15,000 and a car has a fair value of 13 lakh 10,000. Now what is going in or what is going out and what is coming in? So what is happening here is I have a car which is having the value of 13 lakh. The fair value of this car is 13 lakh 25,000. So I am exchanging this car. I am exchanging this car with new car which is having the value of 13 lakh 10,000 and cash of 15,000. So what is the value of the asset coming in is again 13 lakh 25,000. Generally speaking, right, what we can say that asset moving out is having the same asset coming in. So for that purpose we can say there is no commercial substance. The transaction lacks commercial substance. So in that case, we are okay. What we will do, we will record the car at 13 lakhs only. Right? We will record the car at 13 lakh only. Right pile, we will record the car as the value of the old car in the books. If the fair value of the asset given up or asset received is no. Right? I hope everyone is clear with the concept here. Okay. Now moving further, here comes the more, I would say, the critical areas where we need to find out that what to do at every balance sheet date. At what value we are going to record our asset at every balance sheet date? It says there are two models to record asset or PP at every balance sheet date. First one is the cost model. Second one is the revaluation method. We are following the historical cost concept. The cost model would say historical cost minus accumulated depreciation minus any impairment loss. Impairment loss is nothing but the loss in the value of the asset. That's something we have not covered, right? So these are the values which we have. These are the values which we have. Somebody has asked one question. Let me just answer that. Car would remain be at 13 lakhs, whereas cash will also be added for 15,000. Cash will also be added for 15,000, and the difference between those two can be taken to the profit and loss account. I am not changing my values here. Right? So cost minus accumulated depreciation minus impairment loss is actually the cost model. Let's assume XYZ has purchased a building on 1st April 18 for rupees 50 lakhs. Life is 50 years. What would be the value of building? What would be the value of building on 31st March 2020? After 2 years, what would be the value of this building? Right? What would be the lack of the building? The value of the building. Shraddha, the cash flows means cash is moving out though, but what we are assuming, right? What we are assuming that the cost which we are considering here, right? The cost we are considering here, right? As I mentioned, that there they have mentioned that the transaction lack commercial substance. If transaction lack commercial substance, the value should be 13 lakh only. But if the commercial doesn't lack commercial, if transaction doesn't lack commercial substance, what would happen? Then Ankit, as you mentioned, what will happen? That will happen is that old car is going. Right, so new car debit, cash, right, which is 15,000, and old car credit 13 lakhs. Right, if we are going to look at the commercial substance, that's what we do, right? So if we are going to look at the commercial substance, so new car 13 lakh 10,000, cash 15,000, old car credit 13,000, and there is a profit of 25,000. Right, there is a profit of 25,000. Right, that's what we do when commercial substance is there. But if commercial substance is not there, so my value of old car would become the value of new car. So 13 lakh. I am sorry, I missed one point where you have rightly mentioned that what will happen to this 15,000 which we have received in cash. This 15,000, instead of treating this as a separate value, the new asset value would be, new car value would become minus 15,000, so that we can we can add the value, we can show the value of new car. So what exactly it is? When no commercial substance is there. When no commercial substance is there, it means no need to show any profit or loss on transaction. No need to show. Thanks, Ankit. Thanks for correcting this. Right. So I think I missed that. So cash would be shown separately in the balance sheet, 15,000. So no commercial substance means that the fair value of this 1325 and fair value of this is 1325. Why we are saying that? Because here the new car and the old car, the value difference is just 15,000, which I am paying in cash. And something which we have understood, again I am highlighting with different colors, something which is mentioned here as per the question. Right? Even in the question it has been mentioned, right? Whenever we are giving, as I mentioned, that I am giving my old car, getting the new car, there is no movement on the profit and loss, no movement on the cash flows. If that happens, that transaction has no commercial substance. Why they are considering and pay. Is that okay with everybody? So you go with whatever has been mentioned in the question. If question is saying no commercial substance, record the transaction as no commercial substance. If transaction says commercial substance, question says commercial substance, record the transaction as commercial substance. Right? I hope everyone is clear with that. Right? So two models which we discussed, one is cost model, another one is revaluation model. So the cost model which we have talked about, everybody has answered. If the cost is 1st April is 50 lakhs, that is the historical cost. Depreciation would be based on the life. Life is 50 years. So depreciation would be, every year depreciation would be 50 lakhs divided by 50. So my depreciation, accumulated depreciation for 2 years would be 1 lakh multiplied by, and the value of the asset on 31st March 2020 would be 50 lakh minus 2 lakh. I hope everyone is okay with the concept of cost model. Cost model is simple, and 99.9% times every company, right? Practically every company is following the cost model. Right? It is simple also. But what happens if we follow revaluation model? Right? What happens if we follow revaluation model? Revaluation model means when we talk about revaluation model means keep the asset at its fair value, right? Keep the asset at its fair value. If it keeps the asset at its fair value, or if we have to keep the asset at its fair value, it means fair value could be higher from last year or lower from last year. So let's understand with the help of example. Right? Let's assume, or let's take the help. Let's understand with the help of example. I purchased a building on 1st April 18, right, for 50 lakhs. Right? I purchased the building for 50 lakhs. 31st March 19, the value of the building, fair value of building is 70 lakhs. The value has gone up, fair value of the building is 70 lakhs, and the life is 50 years. And the life is 50 years. Now, when this is the case, as I mentioned, if company has to follow a revaluation model, on 31st March 19, they have to keep the asset value at 70 lakhs. So what to do in this particular case? So when the asset has been given, so 1st April 18, the asset which we have is of 50 lakhs. Then I will check 31st March 19, asset value is 70 lakh, but I cannot compare 50 lakh with 70 lakhs because these values are of two different dates. One is on 1st April 18, another one is on 31st March 19. To compare the value with 70 lakhs, first what I need to do, I will depreciate the asset with 1 lakh and find out what would be the value on 31st March 19. This is cost, this is revaluation. So cost is 49 lakhs, whereas revaluation is 70 lakhs. So my asset will now be recorded at 70 lakh, and there is a difference of 70 minus 49 lakhs. What to do with difference? We will discuss that. But I hope everybody understand that how we keep the value or how we bring the value to the revaluation model. Now, what would be the value on 31st March 20? What would be the value on 31st March 20? The value on 31st March 20 would be based on the depreciation, which is now will be charged not on 50 lakhs. The depreciation would be based on 70 lakhs, which is the new value, upon remaining useful life. What is the remaining useful life? here would be 70 lakhs divided by 49. So minus 1,42,857 and the closing value would be this. Now let's assume I revalued again. I found fair value of this changed again. Now the fair value, instead of 70 lakhs, right? I hope everybody understands that we have charged depreciation on the new value. Depreciation would always be charged on the new value, not on the old value. Okay. So fair value changed again. Now the new fair value is 65 lakhs. So my new revalued amount is 65 lakh, and there is a difference is 3,57,140. Is this okay with everybody? What to do with the depreciation, what to do with the revalued amount, what to do with the difference, that all we'll be covering tomorrow when we'll discuss more about the revaluation model. Anybody has any question, please quickly ask. Right? We just have a few minutes. Right? Please quickly ask. Right now, we have just understood what is the meaning of the revaluation. So revaluation meaning is fair value on the date of revaluation less any subsequent accumulated depreciation, and any subsequent depreciation which happens, right? Any subsequent depreciation which happens, that will be happened on the revalued amount. Okay, so I have one question. Rosalind has asked, what if revaluation is done next year in 6 months? So again, revaluation happened on 1st September 20, and the fair value is, let's assume, 80 lakhs. But can I compare 1st September to 31st March? Answer is no. So for that purpose, first I will calculate the depreciation. 65 lakhs divided by what is the remaining useful life? 48 years. But this comes to 1,35,000. But we are calculating depreciation only for 6 months. So into 6 divided by 12. So my depreciation for 6 months would be deducted. And I will first get the values. Value is these two, which is 64 lakh 32,000. My asset on 1st September would be recorded at 80 lakh, and the difference is would be 15,67,000 something. So subsequent accumulated depreciation means the depreciation post revaluation happens. Right? So my carrying value, the closing value based on the revalued amount minus the revalued depreciation. One important point we have to understand, once we follow revaluation model, once we follow revaluation model, that revaluation model has to be applied to entire class of the asset. For example, if you have revalued land, all the lands in the business has to be revalued. If you revalued building, all the buildings in the business has to be revalued. If you revalued machinery, all the machineries in the business has to be revalued. Okay, I just take the query. That means under revaluation model, frequent changes become a regular task for various items of PP. Yes, frequent changes become task when the value of the asset keeps changing every year. When asset doesn't change every year, we may see the intervals that after every 3 years, 5 years, we can do the revaluation. Right? Harita, again, supermarket example, how it differs from continuing business in new location. So it is not new location, right? I am actually renovating my old building. Right? For example, if you remember, we discussed one example earlier. I need more space, so I have added one extra floor. Or now supermarket needs more space, more better equipments, more better everything. They have renovated it. So this renovation is not business in the new location. This renovation is buying the asset and making it as per my requirement. Right? Doing business in new location means that I may have to train my people. Those training, those promotions, those new things will not be considered. Rosalind, that was just to bring that is just the accounting adjustment we have done because we have received cash. Cash has to be recorded separately, 15,000. But transaction has no commercial substance, so we have to record. We should not have to record any profit or any loss in that. Right? So done, guys. We are done with up to here, and we will continue from here in the next class on Monday. Thanks a lot. Thanks a lot for your time. Thank you.